growth and development. The outline is we'll look at growth and development around Islamic finance industry around the world, regional sectorial assets, Islamic banking development, Islamic insurance growth, Islamic capital markets, Islamic banking asset quality, as well as Islamic asset composition. And with that, we'll be able to round off. We hope that we'll be able to finish this class in an hour, 25 minutes or thereabouts. Let us look at the growth and resilience of the Islamic financial service industry. This presentation is based on the Islamic Finance Service Board report 2025 that was just issued in 2026. So we'll do a lot of review up until 2025. This is the growth and market development trend across the industry. The total asset of Islamic finance around the world hit $4.40 trillion. And this has shown consistently a positive 13.4% year-in, year-out growth as at Q3 of 2025, $4.40 trillion US dollars. That's a value. In this, Islamic banking had a year-in, year-out growth of 9.7%. Sukuk had a growth of 21.8%, hitting a 1 trillion USD milestone, while Islamic banking has a market share of 69.3% of the total industry. Islamic fund has a year-in, year-out growth of 4.1%, with a 25.6% of the industry, while Islamic insurance has a year-in, year-out growth of 1.6%, with 13% share of the total industry. You can see that Islamic insurance, which is Takaful, is actually struggling. We will see why as we go along. So this is Islamic financial service industry size by sector and region 2025. To the top of your screen, you are seeing the regions. Then you have a space for the Islamic banking asset. You have the Sukuk outstanding. You have the Islamic fund asset, and you have the Islamic insurance assets. So from the region, you are looking at East Asia and Pacific. Islamic banking asset in that region is 375.85 million USD, while Sukuk is 491.40 USD. Islamic fund is 46.54 USD, while Takaful is 22.49 USD. You then have to the far right the total in USD for the EAP, which is $936.28 billion. Europe and Central Asia has a total share of $217 billion, and Gulf Corporation leads there with $2.367 trillion. And you have Middle East and North Africa with $722.54 billion, and South Asia with $106.82 billion, and Sub-Saharan Africa with $30.79 billion. Then you begin to see the growth across the globe, and you begin to look at Sub-Saharan Africa. And you can also see that in Sub-Saharan Africa, there's actually a lot of challenge. One, introduction, the industry is at infancy stage. Two, there are not a lot of Islamic finance transactions happening in Sub-Saharan Africa. Look at Islamic insurance in Sub-Saharan Africa, it's less than 1%. Look at Sukuk. Look at Sukuk. Sukuk is 1.19. 1.19. So you begin to see that when you go around, even in Islamic banking asset, look at the asset, see, it's so tiny, 14.36. So these are the areas where you have quite a number of challenge. In other jurisdictions that are not captured or are not captured directly in this presentation, you also have a total of 23.60. So because we're in sub-Saharan Africa, I want us to take a look at this and begin to look at how best this asset can grow, especially the industry can grow, especially in sub-Saharan Africa. Especially in sub-Saharan Africa, we had to do something completely different. If the region must grow, if this region must begin to give promises for the future, then there is a need for a lot of investment, a lot of thinking, and doing things in a different way for this part of the industry to grow. So I try to give us, I try to give us a tabular view again of the global Islamic financial industry total assets in USD in trillion between 2012 and 2025, so we can see the growth. And this is how they all perform. Islamic banking assets, Sukuk, are there in the thick blue. The Sukuk are there in the in the navy blue, in the light blue, and Islamic fund are the yellow. The Islamic insurance is at the tip, that small black there. That's it. So you can see graphically that Islamic banking had a growth of 13.4%. And you have 10.3%. Are you following me? Okay, fantastic. Yeah, you see 10.3% growth for the Takaful industry there, and plus 1.7 trillion in total for the total growth since 2020. Now, these are the regional and sectoral distribution of global Islamic financial industry assets. This is how they are distributed around the world. You will also see, you notice two things immediately, that the mature Islamic finance market in GCC and EAP account for 75% of the global Islamic financial service industry asset base. The matured market are actually showing a lot of promising and growth, and they account for the bulk. They account for 75% of the bulk. While Islamic banking continues to dominate, it represents 70% of the global Islamic finance assets. Banking continues to dominate. You see the tab blue by your right, okay, that shows Islamic banking at 69.2%. It shows that the quantumness of the asset is still in banking. And you can see that Islamic insurance in terms of asset is 1.6%, which is not very far from what we have in Nigeria in terms of what the insurance industry and the Takaful industry is actually doing in Nigeria. But when it comes to banking, we are not representing anything big in Nigeria. We're still about 1% of the total banking industry. So the Islamic fund is about 4.1%, and outstanding Sukuk is about 25.1%. Again, when you look at jurisdiction, the GCC is accounting for 53.8%. The Sub-Saharan Africa is still accounting for 0.7%. SA is still accounting for 2.4%. This ECA is accounting for 4.9%. The MENA region, which is the GCC, 16%, and the EAP is accounting for 21.3%. Again, this still brings another challenge to Sub-Saharan Africa to see the level of growth. Like I said, the market in Sub-Saharan Africa is still at infancy. It's not at growth level yet, not to talk of even maturity. So it's still at infancy, and that is why you could see that it has its advantage actually, and it has its disadvantage. A market where you're at infancy, the rates for investors are always higher. And that's why you can see the Sukuk at almost 16 to 17%. In advanced market, you can't get a double digit. It's difficult. It's difficult in advanced market to get a double digit. So it gives opportunities for people who want to do wealth preservation. to be able to actually grow those wealth. People want to grow their wealth, opportunity to also grow their wealth. People who want to transfer their wealth, it also gives them opportunity to be able to transfer quantum of their wealth to the next generation. Now, this is also the regional sectorial asset in percentage. Trying to look at it again in percentage, and you'll be able to see how much of it that has actually gone into East Asia, Europe and Central Asia, Gulf Cooperation Council, Middle East and North Africa, South Asia, as well as Sub-Saharan Africa, as well as others. So this is what the growth pattern has looked like in terms of percentage. So let us look at Islamic banking development across the globe. Let's look at data for the last 10 years. Please, if I'm too slow, please, if I'm too fast, indicate so that I can actually slow down. This is the Islamic banking asset that has grown steadily across all regions with a global cumulative aggregate growth for 5 years of 10.6%. 10.6%. This is good. When you begin to look at Islamic asset from 2012 to 2025 in billions of dollars, this is the growth in 2012. Okay, the growth in 2013, not very similar to that of 2012. And then the growth in 2014, the growth in 2016, and you can see the growth in 2025, which is exponential as compared to that of 2012. Between 2012 to 2020, it is still geometrical, but you begin to see that it begins to tip from 2022. The figure, it begins to tip, and you can then see the rate at which it is growing. When you look at the cumulative aggregate of the regional Islamic banking asset 2020 to 2025 in percentage, Sub-Saharan Africa is showing growth in terms of the number that are coming up, and we can also attest to that even from Nigeria. The number of banks are becoming more. Asset management company, more are being floated. You look at Takaful company, we're having more. So those are growth. So in terms of growth, as we grew by 24.9%. Most of the matured market will not grow that much because they've actually reached most of them, they've not reached their peak. But in terms of growth, there are quite a number of players already in the market. So they won't grow in terms of size quantumly. You won't see that. In Central Asia, you have 20%. In GCC, you have 12.5%. In Europe, you have 11.3%. In EAP, you have 8.8%. In MENA, you have 8.1%. And SA, you have 7.8%. That has been the growth of the regional Islamic banking asset between 2020 and 2025. On the asset side, Sukuk holding and interbank financing expanded faster than financing portfolio in some region. So you have the regional asset composition change in percentage from 2020 to 2025. Interesting. And you can see here what it looks like in Sub-Saharan Africa. Again, you can see that the number of interbank financing went up. If you look at the last bar chart to your right, if you look at the last bar chart to your right, you'll see the growth in orange, interbank financing, and you can also see the sukuk there, and you can see other financing there. While the regional funding composition changes,
Audio lost.
Please bear with us. It's a network glitch, but I'm sure he'll log back in shortly. Thank you for your patience.
Sincere apology, please. My network is highly challenged here. I did mention that from the beginning, that I might be running into some challenge from my location because I'm on a different jurisdiction. I'm sorry for this. Okay. So we look at also the different contract that has been used to do financing within the Islamic finance industry. So we look at Murabaha and commodity Murabaha, which account for significant portion of financing contracts globally. Global financing by contract in 2025 for the percentage is showing that Murabaha still continue to lead. For those who followed our analysis last year, we saw that Murabaha is still being used consistently around the world as one contract to finance most of the assets across the industry. And so it has not budged. Last year it was 45%. This year it's gone to 43.1%. So Murabaha is still being used deeply. We saw also that commodity Murabaha also account for 35.6%. So when you add them together, because it's still Tawarrok, so when you add them together, you still see that across the industry, almost 70% or more than 70% of the total assets are still being financed by Murabaha. So Ijara Muttahiyya Bitamliq account for 8.7%. Then you find some traces of Salam and it thins out. So we learned so much about different contracts, but we see very little of them in terms of financing being applied on the field. Because also the thinking has not gone too far away from conventional banking. And that is why you see that a lot of pressure is still being put on Murabaha. Also because the funders, the providers of funding are still so much afraid and they're trying to edge their risk. So they are going into product that enable them to edge their risk, the risk of default, the risk of non-performing loans, and so non-performing credit. And so they stick more to a contract that is much easier for them, and that is why a lot of them are still sticking to Murabaha. So global composition of deposit also come in. Other remunerative funding, commodity Murabaha and Murabaha Wakala account for a bulk there. You've seen the non-remunerative funding current account of Wadia and profit sharing investment account of Modaraba. So when you look at both sides of the balance sheet, you see that Murabaha is actually very strong in creating the asset. Murabaha is also very strong when it comes into funding for new assets. Sorry, I guess there's a question. No, okay, I can't see any. Please, if you find any question there and I'm not attending to it, somebody should please help me indicate. Thank you. So this is this very busy graph showed the domestic system importance, domestic systemic importance, DSI market retainership in 16 markets, which shows a 93% of global Islamic banking assets. So these are 16 markets that house 93% of the global Islamic market in the world. So Islamic banking assets in the world. So these markets are the one that you find quite large number of Islamic banks within their jurisdiction. They hold a lot of Islamic banks in their country. Somalia is 100% Islamic bank. So you don't have any other banking system in Somalia other than Islamic banks. Sudan is the same thing. Iran, same thing. Saudi Arabia is 75.8%. Brunei is 61.3%. Kuwait is 58.2%. Mauritania is 43.7%. Malaysia is 34.3%. Qatar is 28.1%. Bahrain is 27%. Djibouti is 25%. UAE is 24%. Bangladesh is 22.1%. Jordan is 21.4%. Pakistan 21%, 0.1%. Oman is 19.2%. Palestine is 14.7%. The Medvis 13.5%. Down, 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 down. And you can see Nigeria there at 1.5%. 1.5%. That is what Islamic banking is in Nigeria. By assets. By asset, we're 1.1%. So it's like spelling banking and putting a dot on the I in banking. That is what Islamic banking is in Nigeria. So double-digit growth across many jurisdictions include frontier as an established market. The frontier market and the established market are showing some growth. Like I said, in Nigeria, we're seeing some growth. We've moved from just one bank to about 5 or 6 banks now, and we've moved from 2 takaful company to almost 6 takaful companies. So those growth are showing also across different jurisdictions. And you can see also in United Kingdom, you see some growth in Islamic banking in Thailand, in Kazakhstan, in Sri Lanka, in Kenya. I mean, Kenya is almost catching up with Nigeria in terms of growth. Okay. So you have these 16 jurisdictions that have domestic, they are domestically a significant Islamic banking sector asset. Let us look at takaful, the Islamic insurance, the growth trend around the world. The global insurance assets have grown steadily, surpassing 70 billion US dollars in 2025 quarter 3. So Islamic insurance total assets in 2019, this is what it is, across the different jurisdictions. And you can see what the growth is now. It is now in 2025. In 2025, see what the growth is. So, I mean, it has recorded some good growth. We're seeing growth also in Nigeria, except that compared to the total insurance industry, it is still tiny. These are the established markets which account for 3/4 of the global Islamic insurance industry. And you see that the GCC is actually pulling its weight there at 42.5%. The EAP is pulling its weight at 31.6%. Okay. The MENA region is 19.2%. SA is 2.2%. Sub-Saharan Africa, where we are, is 0.05%. And the ECA is 4.7%. In terms of assets, the asset is also growing, like I just said. But when you superimpose the total insurance industry around the world with it, you see that it is still actually struggling. But it is significant between 2024 and 2025. While it dipped, especially in SA in 2022. I will also show you some of the major contributors to this as we go along. The Islamic capital market size and issuances is what we want to take another look at. And this is the outstanding sukuk cross the USD, I mean, for the first time, cross 1 trillion threshold in 2025. A structural milestone for global Islamic capital markets. In 2025, outstanding sukuk crossed 1 trillion US dollars. So your global sukuk issuance and outstanding 2024 to 2025, and we've tried to show you the figure from 2004 to 2005, 2004 to 2025. And this is the way it has performed. Okay. Sorry again for the glitch. So this is the way Sukuk has been. The year 2025, the year 2025 is actually an important milestone in the history of global Sukuk. This is outstanding at $1 trillion. This is very good number, and we hope to see more. More and more countries, like we did say 2 years ago when we did this review, we said we hope that it will hit $1 trillion in 2025, which it did. We hope to see more will happen again, especially that more nations are trying to recover from economic shock. We're seeing that there are issues around energy in Kenya, in East Africa, in North Africa, and in other parts of the world. And we hope to see more issuance in the Sukuk, especially for infrastructure. And beyond having sovereign Sukuk, we are beginning to see Sukuk shifting more into corporate, and we will see more of that. So these are the activity remain highly concentrated in the core market. GCC and EAP are leading when it comes to the Sukuk issuance. They account for about 91% of the issuances. And you can see that the GCC is accounting for 49.8%, while the EAP is accounting for 40.7%. ECA is accounting for 6.1%, SA is accounting for 1.8%, MENA is accounting for 1.3%, SSA is accounting for 0.1%, and NA is accounting for 0.03%. So you can see that the composition is also varying from region to region. If you look at the type of Sukuk that is issued around the region, the jurisdiction come back with different type of issuance in 2025 per region and the issuing types, the issuers type. SSA show more of multilateral Sukuk and a tiny of corporate Sukuk. Then they have reasonable number of sovereign Sukuk. While for SA, you have more of the sovereign Sukuk and combination there, almost half of the sovereign Sukuk. For NA region, you have all corporate Sukuk. MENA, corporate Sukuk, multilateral Sukuk, and some quasi-sovereign Sukuk also happen there. For GCC, they have all the flavor, from corporate Sukuk to multilateral Sukuk to quasi-sovereign Sukuk and to sovereign Sukuk. The ECA, we are also lucky that in Nigeria, we've seen all the Sukuk type. We've seen the sovereign Sukuk by the federal government. We started with the quasi-sovereign Sukuk by the Osun State government and then followed by the Lagos State government. Then we saw the corporate Sukuk that has been issued, even Taj Bank has a Sukuk. And so we've seen a good combination of Sukuk in Nigeria as well. So capital Sukuk issuance more than double in 2025, driven predominantly by the GCC-based Islamic banks. So we have an additional Taiwan Tier 1 bank, capital Sukuk, which is Basel III, dominated in USD. And you can see that in 2025, it hit an all mark. From 2023, 2024, this is what they did in 2025. Almost double whatever they did in 2024 and quadruple what they did in 2023. Now, sustainability-related issues increased significantly, though it remained a modest share of the broader market. Sustainability-related and green Sukuk issuance 2017 to 2025. New set of Sukuk were being introduced between 2017 rather, and 2025. We saw the emergence of green Sukuk. We saw the emergence of hybrid Sukuk as well. So sustainability Sukuk, hybrid Sukuk, and green Sukuk became very dominant. And this is the way they have performed between 2017 and 2025. Now, let us begin to look at the Islamic banking asset quality, the quality of the asset within the Islamic banking sector across the world. So asset quality pressure have emerged in a small group of jurisdictions. Our Islamic bank average gross non-performing financing to total financing in 2024 quarter 3 to 2025 quarter 3. Okay, from Bangladesh, we see what 2024 is. In Kenya, in Pakistan, in Kazakhstan, in Tunisia, UK, Nigeria. Nigeria, when you look at it, it's almost at par between 2024 to 2025. It's just so tiny there. And in other regions, even in Saudi Arabia, in Saudi Arabia, it's almost flat. So the real estate and household financing accounted for the largest share of the NPF. NPF is non-performing portfolios there. Across most regions, the economic sector wide share in non-performing financing by region. Of course, there are financing that didn't perform, and those that tops the list are majorly real estate and household financing. And from EAP to GCC to MENA to SA, these are the figures. There are no figures for SSA, Sub-Saharan Africa, because most of our housing are mostly independently built. And because of that, it is very difficult to get an accurate evaluation of the figures around Sub-Saharan Africa. For Nigeria, we tried to do some work in the last 3 years, trying to get an estimate from different government organizations on what they have actually done in terms of documentation, so that we'll be able to extrapolate the real estate sector in Nigeria, and also be able to then look at it and say which of them are being financed by Islamic financial institution. But those are still work in progress. This is Islamic banking capital adequacy. We look at the capital adequacy ratio for most countries, which remain comfortably above regulatory minimum requirement, with one exception. The only exception there is Bangladesh. With the COVID and flood that later happened, Bangladesh actually suffered a lot. They suffered a lot, but I know that they are doing everything to get out of it, and they are strong-willed people to get out of it. So you have Tunisia there leading the chart, and followed by Indonesia and Pakistan doing very well. A lot of them did very well in 2024 as compared to 2025. But they are above the requirement of the government, of their central bank, in terms of their adequacy ratio. So we also saw some contraction. Sorry, it's like somebody's saying something. Mustafa also. Okay, maybe that's just a glitch. Okay, so we also look at the capital ratio held broadly stable globally, and though contracting in some jurisdiction, we saw in some jurisdiction that the capital is contracting, but majorly across the world, it's doing very well. And you can see from the left side of your screen for the Taiwan capital ratio, and net profit margin compressed in some markets, particularly in South Asia. Please, can you mute this gentleman? I think he's having some other discussion. Okay, so can you mute Mustafa Manalanga, please? Thank you. So global and regional net profit margin 2024-2025 in some region is contrasting. Like I said, especially in South Asia, the profit is contrasting, because once the market move from growth stage and start getting to advanced stage, profit will ordinarily start coming down. Now, we want to look at the Islamic banking asset composition. Where is their assets? Where did they put it around the world? Which section is it looking at? Balance sheet composition are showing increase in sukuk and interbank financing in some region. And you can see that in sub-Saharan Africa. A lot of the money in sub-Saharan Africa is currently in sukuk and interbank finance. In fact, interbank financing more, then followed by sukuk, then followed by financing. So that's what a lot of them are doing. And when you look at the sukuk holding too, you saw that significant exposure to sovereign sukuk in some Islamic bank securities portfolio. So sukuk holding composition by types as a share of total Islamic banking assets in 2025 is showing that there are more sovereign sukuk than corporate sukuk, except in the GCC region. The GCC region and the EAP region is showing more of, it shows a significant number of corporate, while in sub-Saharan Africa and in SA, you have more of sovereign sukuk. Now, when people become risk averse, you see that they put so much in sovereign sukuk, even though it is lower. And in the long run, inflation might even wipe out your profit. But then at least you will come back with your fund. So it's a return of assets, not return on assets. So Islamic banking liquidity. Liquidity buffer remains ample, with the exception of one jurisdiction experiencing Islamic banking sector stress. Okay, and like we say, that's still Bangladesh. That there's a lot of stress there. So when you look at country level liquidity coverage ratio by percentage, Jordan is there doing well, UK is doing well, Iraq, Pakistan, Qatar, Palestine, Turkey, Malaysia, Saudi Arabia, Kuwait, and Oman. And when you look at country level net stable funding ratio by percentage, you see the behavior there from Palestine to Pakistan, to Morocco, to UK, to Oman, to Kuwait, to Saudi Arabia, to Qatar, and Bangladesh. The interesting lesson for us here is actually on Palestine. Despite the war, they are able to maintain a country-level net stable funding ratio. This is the Islamic banking funding and liability composition. Interesting. The deep blue there shows the deposit, the sukuk there by the sky blue, other securities there, and the interbank liability, then other liabilities. And you see that for all of them, they are able to actually drive quite a number of good deposits. So they fund more via deposits than funding with sukuk or other type of assets. So they fund more with deposit, which means they're able to mobilize good deposits. And this is actually a good job, very good job. When you look at the sub-Saharan Africa to the right of your screen, and you can see what they're doing there, you see that this is actually good. I mean, it's almost competing with MENA. This is the solvency ratio across Islamic insurance markets. Okay? Headline solvency ratio remains above regulatory minima across most markets, even though in Nigeria, we will begin to witness a fluctuation in this because the regulator is actually increasing the capital base of the Takaful company, which is good. If you ask me, they will be able to cover more risk, and they will be able to stay afloat better, and they will be able to compete better within the insurance industry. Wish them all the best. This is the Islamic insurance profitability across the globe. 2025 SA turned out fantastic profits, while in SSA a little bit above 2024, global a little bit above. So if you look at SA, if you look at SSA, Sub-Saharan Africa, and globally, what the figure is, we are almost at par with global performance. MENA, same with 2024. GCC, same as 2024. ECA, lower than 2024. And EAP, same with 2024. We also take a look at the investment income. That is the investment income ratio for the insurance industry. And we looked at it for 2024 and 2025, and we saw the performance across different jurisdictions. 2025, better in quarter 3 than 2024 quarter 3 for Sub-Saharan Africa. Globally, I think we're still mimicking the global performance. And when you look at the return on assets for 2024 and 2025, this is the way we've performed. And 2025 seems that we're lower in Sub-Saharan Africa as compared to 2024. We didn't make good use of our assets. In terms of stretching the asset in Sub-Saharan Africa, it means that we didn't sweat the assets enough. This is the Islamic insurance investment and asset composition from 2024 to 2025 in comparison, looking at how much money they have in bank deposits, in listed equities, in private equities, in mutual fund, in sukuk, in real estate, and in other investment. So it shows that bank deposits remain the single largest asset class on Islamic insurance balance sheets. So when you look at this particular figure, let me go back to the other slide. And you look at this, then we can begin to see the reason why they didn't sweat the assets enough. Because it means that most of the assets is in the hand of the banks. Most of the assets is in the hand of the bank. So they didn't sweat it enough. This is the asset composition in 2025. Bank deposit remain the single largest asset class on Islamic insurance balance sheet. They held on to a lot of cash in the bank, a lot of money in the bank. So insurance, Takaful company needs to start looking at making treasury management an important part of their job. They need to bring in qualified treasurers to take a look at their treasury and see how they can sweat their fund better, rather than holding them in deposit money banks. Now, they also there are successive catastrophic tests which test the limit of local balance sheet across the entire ecosystem in the Takaful industry. So this is the orange line shows the insured losses, and the blue line shows the overall losses. And with this type of catastrophic losses, the insurance industry always take a blow. And in some instances, the blue line will show you risks that were never insured and they have crystallized and they've become problematic to the country. You remember the flood we had in Maiduguri about three years ago. Those floods were never insured. And so when it happened, it did a deep blow on the entire nation. Farmland were washed off, people were killed, animals were lost, food were destroyed. These are not good things. With a Takaful in place and a forecast for the rain, they will have evacuated most of those animals and take out a lot of the people out of those locations before it happens. And some crops that are even yield better for harvesting, they will have harvested them and get out of those locations. So all of this mitigant will have been put in place. And this speaks to all of us as well. We should begin to look at Takaful as a way of life to mitigate risks. This is the Sukuk issuances. Analysis of Sukuk issuances in 2025. We have those who are initial issuances, and they account for $4.2 billion, accounting for 74.3%. Reopening, which is 60.2 billion USD, which account for 25.7%. And 80% sovereign sukuk, 20% semi-sovereign sukuk. So for the reopening, 80% of them are sovereign sukuk, which is a national sukuk, and 20% is a quasi-sovereign sukuk, which is a semi-sovereign sukuk. So distribution per issuing type shows 60% corporate, 22% semi-sovereign, 14% sovereign, and 7% multilateral. This is the sukuk trend. Global sukuk issuance surpassed $234 billion. And around the world, corporate sukuk account for 43.4%. That's the gorilla in the market. 43.4% corporate sukuk. Multilateral, 4.8%. Quasi-sovereign, 21%. Sovereign, 30%. You know, it's not the same thing in Nigeria. The sovereign sukuk in Nigeria is about 80 to 90% of the total sukuk issuance. This is quasi-sovereign and corporate sukuk issuance has increased, change in sukuk issuance by issuing type 2024 to 2025 in percentage. Okay? And you can see sovereign decreased by 18%, quasi-sovereign increased by 45.4%, corporate increased by 16%, and multilateral decreased by 46.1%. This is the sukuk by maturity profile. Okay? So mid-range to long maturities increase, while short and ultra-long tenor contracting at both ends of the curve. So we are having bills type to 1 year are contracting, 2 to 5 years, a little bit of growth there, 6 to 10 years showing some growth, 11 to 30 years not growing much, and you have more than 30 years, what they call the perpetual sukuk. It's also contrasting. People are asking themselves, sukuk for 30 years, how old am I? So investors are looking at their age before they're investing. So this is looking at sukuk from both the risk, the tenure, and the age. This is a composition of sukuk issuance between local currency, domestic market, and reliance on foreign currency funding in difference deferred between jurisdiction. So different countries are looking at the composition of what they have. Look at Gambia, Kazakhstan, Tanzania, all their debts local. Look at Nigeria, 100% local. Look at Brunei, Senegal, 100% local. Look at United Kingdom, almost 100% except for the tip there, which is foreign currency. So we hope that in another 4 to 5 years, we begin to see dollar-issued sukuk, pounds-issued sukuk, euro-issued sukuk in Nigeria. Unfortunately, this might not come as fast as we thought because we saw that the euro bond in the last 4 to 5 years actually suffered so much. And even when Ghana tried to issue euro bond 4 years ago, they got their finger burnt. This is sukuk by contract. What type of contract? Pushing up the sukuk. You know that most of our own sukuk in Nigeria are sukuk ijara, especially the sovereign sukuk, except for Taj Bank sukuk, which is the Murabaha sukuk, Mudaraba sukuk. So this is it globally. Musharaka 0.5%, Salam 0.2%, Other 1.5%, Mudaraba 6.0%, Ijara 17.8%, Murabaha 15.5%, Wakala bil Istimah 16%, and Composites 41.8%. So in different jurisdictions, they are looking at different Sukuk type that they actually put into the market. So we saw also that the Salam Sukuk suffered a 73% negative decrease. Muraba Sukuk suffered 35.5%. Wakala Sukuk also suffered a 33.5% decrease. A Mudaraba Sukuk suffered 5.4% decrease. Ijara grew by 5.6%. Musharaka grew by 32.8%. And composite, which is hybrid, grew by 68.9%. When market begins to become mature, you begin to find a combination of contract types and hybrid sukuk. These are Islamic funds growth and performance. Islamic funds assets under management recovered in 2025 but remain small and geographically concentrated relative to the Islamic financial service industry assets. So it suffered in 2024. In 2019, when COVID happened, immediately after COVID in 2020, we saw some growth in 2020 to 2021 to 2022, but we saw a decline from 2023, further decline in 2024. In fact, analysts were predicting a decline in 2025, but we saw a growth, a slight growth in 2025 for Islamic Fund. And a lot of other organizations will also be issuing a lot of funds will also be issuing commercial paper, and we need to look out for them because the rates are good. These are the performance of Islamic Fund in 2025. Sukuk, average 1 year return, 42. Average 3 years return, 42. Average 5-year return, 2.8. Equity, commodities, real estate, and mixed fund. And this is the average that it has shown. Average 1 year, 17.1. Average 3 years, 8.7. Average 5 years, 5.0. These are figures from Bloomberg. Okay. Let's summarize. The growth momentum of the Islamic financial service industry strengthened further in 2025. We saw robust, broad-based growth was recorded across all sectors. Non-banking segments sustained rates that exceeded those of the banking sector, underscoring their increasing contribution to the overall industry momentum. This growth reflects favorable financing conditions, regulatory and market development, and sustained increase in demand for Islamic financial products, particularly in Africa and Central Asia. These are the regional classification that we have used. And for all those who attended and registered for this program, you get a copy of the slide that after we're done with them, we will send a copy to you, and a copy of the video will also be available on our channel. Thank you. If there are questions, please, let's take them. I think we still have some time. Questions, if any? Okay. In the absence of any question, we'll call it a good morning. Assalamu alaikum warahmatullah.
Assalamu alaikum. Assalamu
Hello.
alaikum.
I raised my hand.
Hello, sir.
I
Okay,
raise my
nobody
hand.
is saying it here. Please go ahead and
Hello,
ask
sir.
your. Please go ahead.
Yes, sir.
Ask your.
Yes,
Yes.
assalamu alaikum warahmatullahi. My name is
Walaikum salam.
Adefiyu Ramatalai. Yes, sir. Thank you for the insight that you have given us about the Islamic finance institution operations. My question is this, sir. Like you said, majorly the insurance Takafu operation, they put a lot of their money in the banking industry. That I want to know, is it not how possible it is for banking industry to put their money also in insurance in Takafu, you know, companies? Is it possible so that we can have a growth through that?
Well, if it is a bank insurance, if it is if it's a takaful, bank takaful, they call it. If it's a banking, a banking system that is led by insurance, then it is easier. But the bank will tell you that they have all the machineries to make better money than a takaful company will do, which is a one-sided argument. Because when you look at the risk, insurance industry have a better way to mitigate risks. But what I think that the Takafu company, insurance, particularly in Nigeria, is suffering. Not just Takafu, the entire insurance. The rate of penetration of insurance completely in Nigeria is still very, very low. It's still less than 5%. So I think what we should start with is to start deepening insurance. How do we deepen it? If we can begin to deepen insurance in Nigeria, that way Takafu will also deepen. We begin to look at it differently, that people are just collecting our money. We look at it that we're actually mitigating risks. Okay? And if we have this, then there will be more funds in the hand of the Takafu people, practitioners, and they can invest better. Also, the money that they have currently at hand, they also need to take another look at it and say, how do we invest it better? How do we invest it better? So instead of saying, let's attract so much, the one that we currently have, how do we invest it better? Because even I'm a father and I have my child in school and I'm going to make contribution. And I'm already getting to an age where I say, alhamdulillah, I'm above the minimum age in Nigeria, for instance. The place I want to put my money is not going to be the bank. I want to put my money into a takaful company so that they can help me to mitigate the risk and ensure that my child get that education when I'm no more. They will be able to take a look at it. So the Takafu company will be able to look at my child, take care of my child, and ensure that my child gets that education that is required. So I think that Takafu companies need to wake up and get their job done. That is what I think we should be looking at. Thank you, ma'am.
Assalamu alaikum warahmatullahi wabarakatuh.
Assalamu alaikum.
My question is the Islamic financing that we have just
I didn't hear you well.
explained.
Please raise your voice a little bit.
The Islamic financing you just discussed recent now, I bank with one of the banks in Nigeria that does the Islamic financing. But the problem is, as a business owner, that we need to get some support, as in financing support from these banks. They find it difficult to put their money in our, as in to support us with the financing. I don't know what the problem is, but these are the marketing messages that they gave us for us to go and bank with them. But the case is not the same when we start banking with them and we sought financing from them. I don't know if you have anything to say about that. The second thing about it is I have a personal account also, and I put my money there. Maybe if I don't have any need for the money, I just put it in their investment portfolio. I found that one of the money that I put there for a period of maybe 6 months, they gave me a returns of 18,000 naira on 500,000. At the end of the day, they said they deducted another money, maybe around or 4,000 naira. And I was wondering what would be the cost. Now, we're giving me excuses of central bank has to take a particular portion and the rest. I can't really understand. Maybe if you can put more light into this for me. Thank you.
Okay, so for this last question that you asked, which is the money you put in and the rest, you need to let us see the detail of the investment that they gave to you so that we know how they calculated their returns. That's one part. On the first question, banks don't put their money in new businesses. Let me say that again. You have to put your own money into it. Usually they want to see the business and what you are doing in the next 3 to 5 years before they start giving you money. Because the money they are giving to you does not belong to them. It belongs to depositors. And if the depositors go back there and they say they put their money into XYZ and the money is gone, it's none of their business. It's none of the depositors' business. You must return their money back to them. I'm not defending the bank. I'm just telling you reality. That 500,000 naira that you give to the bank, if they invest it into a business and they say, sorry, my sister, this money, we invest it into this money. Wallahi, the people, they lost the money and we can't find the money again. So just go home and let's continue to pray to Allah that the business come back. You will make trouble. You will. And the Central Bank of Nigeria also told them that they have no right to lose people's money. It's a peculiar situation in Nigeria that Islamic Bank has no right to come back and say, we lost the money. Even if your Sharia say you can lose the money, we don't allow it. You must restore the owner of the money back to their original position. If they give you 500,000, you must give them 500 position. If you don't have profit to give them their money back. That is the position in Nigeria. Now, there are 3 reasons why a lot of people are not able to access funding. And I think that is what is going to be on our next webinar. We're going to bring a few of the Islamic banks into those webinars. One is people don't even know how to present their case to the bank. They think talking to the account officer is everything. Most of the account officers are not there when your credit decisions are made. Okay? There are documentation that are submitted. Part of the consultancy that I have offered in my personal capacity to banks is to look at people when they submit their proposal. I can tell you, I've reviewed a lot of proposals. 90% of them are not bankable. Over 90% are not bankable. People just write something by the roadside or when they are tired. They just write something and submit it to the bank. That's second case. Third case, banks don't invest in high risk. When the risks are so high and the return does not cover those risks exponentially, they don't invest into it. So you have to look at the industry. They also receive funds from multilateral organizations. Some of those funds have direction. Say that a multilateral organization is giving them funds, saying it's like, say, take an example of Islamic Development Bank, and it's saying, invest this money in small and medium enterprises. I don't want petroleum. I want agric value chain. I want clean energy. And you're not bringing something from petroleum, say you want to do oil and gas. They won't give you the money. They won't give you because that is not what that money is meant for. But when you begin to sit with somebody more senior in the bank and you have a record with them that they can see, then you can begin to, they're beginning to tell you that, okay, so we have this fund. This is the investment type that is coming with it. This is the rate that is on this money. This is the direction that this fund is looking at. Then you can access those funds. You don't do a business without understanding your bank. Your bank must go along with you at all time so that they understand your business type, your funding need, and your direction. And they will even be the one telling you, this thing you are doing, be careful with it. They can offer some level of consultancy for you. There's a course we did in this class where we spoke about corporate banking in the course of this course and what corporate bankers will do to their clients. So all those things are very important. You need to take a look at them. If you drop your details with the secretary, with the registrar, and we get it, we can help you to look at your case further and advise you more on what you need to do. I hope that helps. Assalamu alaikum.
Thank you. Walaikum assalam wa rahmatullahi wa barakatuh.
Assalamu alaikum.
Assalamu alaikum, sir.
Wa alaikum
Assalamu
salam.
alaikum.
Please go ahead now.
Myself?
Should I talk?
Yes, go ahead. It's
Yes,
free.
sir.
Yes, ma'am.
Yeah,
Go ahead.
yes, sir. Yes, sir. In the way you answer my question the other time, you
Now,
mentioned if you were to be a somebody who wants to invest and you
yes.
are considering being in old age, you would prefer to put your money in the takafu, at least to
Yes.
mitigate some risk.
Yes.
Dealing with insurance, they will tell you they are insurable age. There's some
Yes.
certain age that is about 50 going to 60, they will tell you they are not insurable age. So considering
Yes.
that, is it not going to affect the capital you are going to put down?
No. Let me tell you what I will do. It depends on policy type you want to pick. Now, and I will give you an hypothetical example with myself. I had a son when I was 55. You know, it's disaster to have a son at 55.
I disagree.
Yes,
So
it's possible.
yes, I had it. I couldn't discuss it with my friend. Even the day of the naming ceremony, I didn't invite anybody. But what, I mean, that's a
Why?
joke.
That is
That's a joke.
possible. There are
And it's
many
possible
people
now.
that
Yes, well,
It's
but
possible with men.
you are a finance person, you are careful having a child at that age because you are thinking so many things. Yes, you are thinking so many things. So what I did was I went to sit down with my Takaful company. And I'm not trying to advertise them here. I went to sit down with no Takaful. And I said, this guy is 0 age today. In so months, it's going to be 1 year. By the time he's 16, he will be looking at going to the university. And this is going to be my age. I added 16 to 55. Do the arithmetic. What did you get?
That's 75, sir.
Now, if anybody is even praying, you don't want to live beyond those kind of age. So, so if at 75, I won't be earning anything. I'll probably be, if I'm still alive, which I doubt, I'll just be reading newspaper somewhere. So, but I want this boy to go to university and I don't want him to become a burden on anyone. So, they helped me to calculate how much it will cost for him to go to school, considering inflation, compounding it, and everything. And they say from that time until he gets 16, this is how much you open an account for him with us and how much you'll be putting on the account on a monthly basis. Do you understand what I'm saying?
Yes, sir.
Now, what am I doing? I'm hedging my risk for the future. I'm hedging my risk for the future. I don't want the future to come and he now becomes a burden on his brothers and his sisters. So I'm hedging that. So those are some of the things that a lot of us don't do. We don't hedge those things. We allow it to crystallize. Then we begin to run up and down. Say, hey, please help me. Can you go? No, even health. I've seen so many pictures. This week alone in Nigeria, I've seen over 30 pictures out there for people looking for donation for other people. They have this kind of ailment. They have that kind of ailment. Whatever happens to health insurance, what are we doing to it? There are a lot of health insurance out there. What are we doing so that when this kind of thing happens, we are able to take care of our health? We might not be able to cover it 100%, but we're able to do something. So investment really is a function of three things, and I want you to write it down if you have a pen.
Yes, sir.
One is a function of your risk appetite. How much risk are you willing to take? Second is a function of your age. How old are you? You take more risk when you are younger. You take less risk when you are older. When you find people who are 55 and above, if you tell them, there is something that is happening here, come and invest, they tell you, no, please, I want something that, and that's why you see a lot of them in Sukuk. They are careful. Then the third one is, what kind of fund do you have? So those three things are very important when you want to invest. And it's good to always talk to your investment managers. They can guide you. I hope that helps.
Yes, sir.
Sir,
There's
I
a
want
brother
to
that is trying to speak. Yes,
I
there's a
want to
brother that
put
is trying to speak. Please.
Naam, Assalamu alaikum, Sir Broadcaster.
Assalamu alaikum.
This brother, they are chancing you. These sisters
I've
are
been
chancing you.
holding on. I
Go ahead.
think the women should allow us to speak.
Okay, please go ahead, then I'll take
Okay.
it on after you.
Yeah. Dr. Salahuddin, I'm Professor Mustafa Abubakar.
Prof, how you doing, sir?
Alhamdulillah.
Well done, sir.
I've been waiting for you on WhatsApp. You sent me something
Yes,
about
sir.
I can't. So I've been waiting. I didn't see your response.
I was reading you on
Anyway,
on your platform, your WhatsApp platform. I've been reading every message you posted.
All right, that's great. I appreciate. I appreciate.
Alhamdulillah.
Honestly, I even nearly missed this session, but Alhamdulillah, I was able to, because I'm on a weekend in Kaduna enjoying myself.
Allah Akbar. That's good. Alhamdulillah.
So I have listened to a better part of your presentation.
All right,
And
sir.
I think I noticed some salient points you made. I do hope that you will make good the promise to send the recorded version of the
Inshallah,
this
it will be
session.
on our YouTube channel. We will send you the link. Everybody that have registered, inshallah, we'll do that.
Okay. One thing I wanted to let us have a kind of a rub of mind is what I read. I read something yesterday posted on that group.
Yes, sir.
That Jaiz Bank is awaiting CBN approval. Jaiz Bank is awaiting CBN approval to grant financing on non-collateral basis to SMEs.
Yes.
Did you read that?
There's going to be a meeting. Maybe I'll send you a link. There's going to be a strategy meeting on that from 11:30 today. And I'm also going to be on that discussion. It's still something that is in the works. And I want you to be part of the meeting. So immediately after this talk, I will share the link with you because I'm also I'm currently outside of the country. And so you can be in the meeting and we can also make our submission. Yes, sir.
Okay.
When
is it coming up?
Discussion, sir.
No, it is something we want.
Please,
we want SMEs. We want SMEs to benefit from it. We are not, myself and Professor Mustafa are not the one benefiting.
Yes.
We just want SMEs.
Yeah.
We are
so
all right,
working
sir.
so that
Thank you,
SMEs
sir.
can benefit from
Okay,
it.
kindly.
Yes.
Thank you,
No
sir.
problem, sir.
Yes,
Kindly
sir.
sir.
Thank you, sir.
It
Thank
has
you.
been itching my mind, this issue of SME finance.
Yes. It's a serious issue for us, wallahi. But we need to do it. And Prof, I will once I share it with you and I will have another meeting so that we'll take another look at it because we need to do something. Most of the SMEs and the requirements that the banks are asking them to bring, they will never be able to get it. So a lot of them will not be able to get it. So we need something different. Yes. And you see, Prof,
and
we also need... Yes, sir. You also see,
continue.
Prof, we might also need a trust for them. This trust can pool and provide collateral on their behalf. And so when they come in, they can take the... Yes. Go ahead, sir.
Wakaf may also work subject to some...
Yes, Wakaf can also work. Yes, sir. Yes, Wakf can also work. But most of the Wakf that we currently have are narrowly focused on specific things. So we might need to look at a hybrid that can help us in this situation.
Anyway, when we converge, we talk more.
Inshallah. Thank you, sir.
No problem.
Assalamu alaikum sir.
Wa
I appreciate that Professor Mustafa actually spoke before me because I'm going to actually talk in line with what he just discussed. So thank you, sir, for the presentation on Islamic finance, specifically on banking and takaful in Nigeria. The well presentation with a detailed presentation with analysis. Thank you very much, sir. So my own question now is in line with, okay, there is still around SMEs and entrepreneurship with Islamic finance. Of course, there's a common saying that says that when Muslims wants to get finance from, or businesses wants to get support from banks, Islamic banks, they are not eligible. But by the time they become eligible, they don't approach Islamic banking for support. I would like to say that based on what is happening in other countries, we know that the SMEs are actually getting fundings and support that and these are contributing greatly to their economic growth. So would you say that if
please go to your question, man. My sister, please go to your question.
So if you say that SMEs don't get support from, all right,
go to your question. Go to your question.
Okay. So my question is, if SMEs don't get support from banking or from banks, how about Islamic social finance? I want you to share your insights about this. Do we not have information, as in are they not able to get support from social finance in Nigeria? Or what is your insight about this discussion?
Well, SME gets finance in Nigeria. SME gets Islamic finance in Nigeria. They get it. The only challenge is that there are criteria they need to meet. Even when you go to conventional banks too, there are criteria you need to meet. People think that because it is Islamic banking, they thought it is free financing. It's not free financing. They must make profit as well and also ensure that they keep their shareholders and stockholders abreast of what they are making. That is one thing we must not forget. Because it is Islamic finance, it's not free finance. Very important. We must think about that. Secondly, they fund SMEs, but those SMEs have criteria that they have met. For people who are graduate of our PGD program, we have a fund in-house between 100 to 300 million for those who have attended our program that we point them to, and a few people have accessed it as well. But there are criteria they need to meet. Once they meet those criteria, they are able to get those funding. And people have accessed those money. They've gotten between 100 to 300 million to do their business. But we will not give them money that we know that, or we will not point them to those funds when the documentation they have submitted to us is showing that this person just wants money to eat. We won't do it. Because we want people to continually to enjoy that, we will not go and misbehave so that the fund holders now withheld the money. It now becomes problematic for us. Islamic social finance is a different field. And the field looks out for people who are at the base of the pyramid. So they are not sponsoring SMEs. They are sponsoring micro businesses. They are sponsoring people who need zakat fund. They are giving them zakat fund. They are providing them with social funds. So people in distress, people in drought area, people with health challenges, people that deserve zakat, people that deserve sadaqah, those are the people they are focused on. So, but it is also good that these people they are also providing a different type of zakat these days, which has also been very, very instrumental. And I know that an organization in Lagos called LEMU provides zakat for the people. Their last zakat distribution, I was a guest lecturer, and what I saw, I was marveled. They gave people tricycle, they gave people sewing machines, they gave people ice making machines. Instead of just giving them cash and they spend the cash, they give them this equipment and they are able to use it to develop themselves and make further money. So these are micro businesses, okay? And these micro businesses can grow. But then when you give them cash, they can put it into things they don't know. And as such, they now give them lectures, they do all sorts and give them. What we have not been able to do is to mimic a Qadr Hassan fund. If we're able to mimic the type of Qadr Hassan fund that they have in Pakistan, then we probably will be able to reach more people. Also, we need to put the data together from across all of the Islamic social finance so that we stop this possibility of people going from one social finance to another social finance. So one person is going to 2 or 3 or 5 zakat organization to collect money same year. So depriving 4 other people the opportunity to get to those money. So those ones are still in the works, and a lot of work is still being done on it. And I could see a lot of writing, even by Professor Mustafa that just spoke on things like that. I could see a lot of the work that he has done on that area. I'm also sitting on the board of 3 Waqf. I'm sitting on the board of 3 Waqf, and I know the challenge that it takes to even say you want to give free money to our people. To give money for free to our people is difficult because you probably, in every 10, you're probably seeing 8 lies. So the social funds are there, but their focus are micro businesses and they are pulling their weight. I saw another one by our brother, Sohanla, forgot his name now. Why should I forget the name of this doctor? Yeah, I saw it on the pages of social media, and they also empower some people for almost 489 million naira last 2 weeks. So on social media, if I get the name, inshallah, I'll bring it back. My last sisters. Salam
Shuaibu? Is it Dr. Abdullah Shuaibu?
Dr. Abdullah Shuaibu, thank you very much. Jazakallah. Yes. Any more question?
There's a question in the chat box.
Oh, okay. I will try and read that now. Thank you. Thanks for calling my attention to it. Don't mind me.
Assalamu alaikum.
Okay. Wa alaikum salam to Allah.
Yeah, doctor, I would like to have your number and I will reach out to you after the meeting. So,
Inshallah. I'm putting it straight onto the chat box now. You can get me now on WhatsApp. Direct phone call might not be possible at the moment, but I'm putting my number there right away.
Thank you very much.
Now, Assalamu alaikum, doctor.
Yes, sir. Alaikum salam to Allah.
Jazakumullah khairan for the presentation and the information shared. I actually shared my question expecting that because you might need to exit for the other meeting. But my question revolves around mortgage. And it's been a lingering issue. We've not been able to address it anyway, and we have not been able to equally tie in into NHS, even though I'm hearing that there's something in the works. But what do we do, and how best should we attack this? Both from corporate is looking like it's not possible because of expectations.
Yeah, no, it's possible, sir. Some people, are you into real estate development, brother? Or for personal mortgage?
I'm into fintech.
Okay, but you want a personal mortgage.
No, what I see, I'm looking towards solutions generally for everybody. It looks like as if we have scanty solutions around for this for now.
Unfortunately, the mortgage for everybody is not feasible. There is because mortgage are very selective. The kind of house you want and where you want it is different from the kind of house I want and where I want it. You understand?
Yes, sir.
So it is good to have, I know there's an organization, I will share the detail, inshallah, on the platform of the Nungo Business School. There's an organization that was just formed. They came to meet me during the Islamic Development Bank function that we had in Lagos, and they spoke about what they do in mortgage. And the contributory is a contributory mortgage scheme, and you only need to deposit 20% of it. They have some set of mortgage, they sell them to you and they finance it. And if you want to build from scratch, you provide the documentation and they fund the development and they spread it over 18 years. Inshallah, I will share the detail. I will share the detail.
Oh, okay, sir. Exactly. I would really like to see what the model they are using and how they've been able to attack the problem.
All right, fine. Inshallah. Yes, go ahead, please. Okay. Can I assume there's no more question? Okay. Alhamdulillah. Number is not correct. Okay. This. I think we've dealt with that. All right. Thank you very much for finding time to join us at the Nungu Business School class today. And we very much appreciate your joining our PG student in this course. One of the things that we do from time to time is that we have classes like this that are open to the public. I think in the course of the program, we have open classes, about 3 or 5 that form part of our monthly webinar. Sometimes it's not part of the class. Sometimes we only bring in experts from outside to also speak to us about other topics. We thank you for finding time for joining the class today. And in the absence of any other question, I wish you all well. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, Victor.